Welcome, everybody, to the Talk With Kiet show, where we connect people, ideas, and capital to help make a difference in the world. Today, I'm on with my dear friend Paul Taylor, the CEO and founder of Hub. Paul and I will talk about his extensive career and entrepreneurship journey, as well as how to build a business that really helps reimagine the operational platform for asset managers. Paul, welcome to the show.
Kit, thank you. Thank you so much for inviting me on. I'm really looking forward to this. It's great to see you.
You're a popular guy. Look, like there's a lot of viewers coming on today. People expecting this to be a great conversation, and our old boss Lance Ugler is making sure people jump on and listen to us talk about the business of Hub. But before we go there, Paul, what we typically do for all entrepreneurs really talk about their origin story of how they come about. And why that's important is, we had a few university professors on prior to this. And we now actually have a lot of, young professionals, people from university that listens in. And so a lot of these stories become great inspiration for them to understand, to get where you are, it's not easy. There's a lot of stories behind it, like the iceberg, right? Yeah.
Sure.
Up top looks great, but there's all the things you got to go through to get where you are today. So that origin story is extremely important of an insight. So, Paul, what is the Paul Taylor origin story?
Yeah, well, look, I think, for me, it's a lot of learning, it's a lot of luck, and it's some great mentors along the way. I grew up in Dublin, Ireland. I graduated from my college and came to London for my first job on a trading desk in 1994. So this is my 30th year involved in financial markets. So when I came to the markets in 94, I thought I'd missed it all, the 80s and everything that had gone on, thought I'd missed it all. And then, ended up sitting in an emerging market trading desk, trading Brady bonds, trying to figure out how yield curves worked. And because I was sort of relatively young and could operate a sunbox, they made me head of structured product trading. And prop trading for emerging market debt in Bank of America and Credit Lyonnais. I joined the asset management and private equity business in 1998. So I spent 4 years in trading and then really started my asset management career in 1998 in the United States, working for a gentleman called Nick Brady. Mr. Brady had been Secretary of Treasury for Ronald Reagan and Bush 41, and he had a private equity and marketable securities hedge fund business in Washington D.C. and New York, and that's where I started to discover what systems and data and the actual plumbing behind running trading and risk look like. So all along the way, I had great mentors that helped me understand the marketplace, and certainly Mr. Brady gave me that perspective of the business of asset management. We sold that business to Franklin Templeton 5-6 years later. I moved back to London and, being young and naive, decided that the entrepreneurial spirit of starting my own business was too much, which I did. Launch my own asset management hedge fund business in London, 2004. Sold that in 2010. Became the CEO of a larger business and then sold that again, all in asset management. So I sort of finished my asset management experience in 2015 when we met, and I joined Market as it was at the time, soon to become IHS Market, now obviously SPGI, and that really was that was the next phase from being an investor to an operator in these businesses. So to me, that it's all, as I said, it's all been about learning. Bit of luck, timing of markets, lots of stuff going on, and really underlying all of that has been how technology has driven the growth of markets and data within the markets and how asset managers operate. So the ability to then be part of an amazing business that was the story of Market, acquiring businesses, bringing businesses together, growing them at scale for enterprise solutions, that really led me to learn from 2015 to 2020 more than I'd learned probably in the previous 10 years, and really gave me the desire to then, when the opportunity presented itself to found Hub, we launched that in 2021 with this amazing partnership that we have with PIMCO, Man, Microsoft, S&P, and State Street. So I've been involved in this space for 30 years, from a trading perspective, an investing perspective, an operator perspective, and now being very fortunate to be a leader of an amazing team with great products and great customers, and really excited to talk about what's next in both the industry and indeed Hub.
Yeah, no, and that's amazing background, by the way. And when you think about when you left college 20, 34 years ago, right, your aspiration was to either join a bank or join an asset manager and be in a front office, right? Like I joined BlackRock with the same aspiration of being asset management one day. In your view, is that changing, given the now fintech, the solution set to help solve for banks, for asset managers? Like if you were to get out of college today, like would you have taken the same path, or you think there's other possibilities in terms of the world we live in?
Yeah, it's really interesting. I have a son who's in college now, and he's just starting his degree, but all of his friends, when they talk about that, I still think there's a pull towards the banking and finance world, both from a trading perspective. For me, it was always I wanted to be in that front office trading and making markets and taking investment positions, and I was successful to do that. If you ask me whether I'd be able to do that today, probably not. I'm not as quantitative as some of the folks that are involved in that, but the desire to be involved in financial services was always there with me, and I think it's still a big draw for undergraduates. I do think, though, with the experience that we've seen over the last 10 years, but in the last 2 years, the desire to be involved in that technology, whether it's fintech or otherwise, is massive, right? And you don't have to have that engineer technical background to create solutions for big challenges, both in multiple industries. And so I think there's a big entrepreneurial interest that's been spiked by awareness of that's a path for you. The biggest thing really for me was not being aware that was a path 30 years ago. You didn't have the ability to have a supercomputer in your pocket that you can research, and you learn in so many different ways today, rather than the more traditional book-based library. You can learn so many platforms, so many opportunities to understand how to progress your career. So I do think there's a much broader opportunity for folks today. I'm much more positive about that for the younger folks coming through in their careers. But it's always going to be the same, work hard, being interested in it, and make it something that you want to do. And then, if you're lucky and you have a couple of great mentors along the way, I don't think I've ever felt like I've worked a day in my life. It's always been excited to be here. It doesn't mean every day is easy, but what it does mean is that you can be very positive about the future. And to me, that's probably the most critical part of what we're doing here.
Yeah. No, that's a very good point. Now, in terms of, from the time you were in the asset management industry to now, lots have changed, right? Like, 30 years ago, if you manage $1 billion or $5 billion, that would have been a big deal. Today, if you're not $50 billion, you're not relevant, or even $1 trillion, right? Like, well, what are some of the big changes that you've seen that's really quite impactful today, where, if you were to launch a fund today, like what would have been different than when you did, a decade, 2 decades ago?
Yeah, I mean, it's a great question. I think, I remember running proprietary trading positions in banks, which were sort of the precursor to you would risk bank capital. And so some of those early traders, and the most famous being the Soroses or the Moores and those Louis Bacons and things like that, who came out early on. I mean, actually, the capital they raised was incredibly small in the context of today. Obviously, markets were smaller, market cap, etc., was smaller, but it was something that was an easier thing to do. It was usually typically, and again, the strategy was usually fairly vanilla. I mean, a trading floor used to look like, well, you have an equity trading firm, an equity trading desk, a fixed income trading desk, a corporate desk, a repo desk, a futures desk. I think what we're seeing now has been the amalgamation of those strategies and the risks around them, and really the institutional nature of capital coming into the marketplace. So prior to this, it was, prior to 25, 30 years ago, capital being allocated to alternative funds was a tiny fraction. It was a 60-40 bond equity split. And that was something that had perpetuated for a long time. The mutual fund growth area and everything else had really scaled from the 60s all the way up to the Fidelities and the Peter Lynch's, etc., into the 80s and 90s. And that then became part of the institutional money investing. So that it went from being a smaller thing that you could do to having to have institutional grade controls, systems, compliance, regulation around all of those functions. Obviously, then you had major market dislocations starting in sort of the late 90s with long-term capital, which were some of these earlier hedge funds, which then that went into the crisis ultimately we saw in 2008. But on the back of that today, to start any business, you really have to think of it as a business, not the art of trading, as it were, as it was maybe 30 years ago. It was, what's the business you're going to run, and how are you going to structure that today? So I would say that hence the hurdle for AUM, because obviously in the asset management industry, that's what drives you as a manager, your revenue, right? It's usually the pricing model is on basis points. So in order for that to be to support that infrastructure that's required by the institutional investors, the regulators, etc., you have to have an at-scale models, which means the big guys get bigger, and it's harder for smaller managers to launch and to survive. But I do actually think that with the advent of trading platforms, with the ability of technology now to enable more folks to be involved, you've seen obviously democratization of retail markets. I think it is something that is easier to do and easier to access, but it still requires real institutional quality infrastructure and operating platforms to be successful in. And so for me, I think maybe bring it back to what we're doing here in Hub. Prior to this, it was something that was usually built in-house, or it was something that was adopted from one of the large major institutional platforms. Your front, middle, and back office traditional breakdown in silos between inside of an organization. I think the future with technology blurs those lines. You still have the operational functions within those areas of front office, portfolio managers, research, risk, etc., middle and back doing accounting and reconciliation. But the data that flows through that we're seeing, and certainly the solutions that we're solving in Hub, requires that centralized, well-governed environment in order to make better investment decisions, de-risk your operation, streamline your middle and back office, and give access to a governed data model across the firm. So I think a lot has changed in that period of time, but scale is the one thing that is enabling real success. But it's a challenge, right? Because we've seen lots of M&A in this space, which creates it's very hard to take cost synergies out in the asset management industry because of the systems that have been there in place. You usually typically end up with 5 front office systems, 6 or 7 back office books of record, etc. These are challenges that are something that have not been solved in an efficient way. But to me, the opportunity that we're seeing and the customers that we're talking with Hub, both our foundation partners and as we start the go-to-market process, is everybody still has the same problems that I encountered even when I started my career in the asset management world in 1998. So my goodness, 26 years ago, we're still seeing those. Sorry, yeah. Kid.
So you raise a great point, because you say back then certain asset class didn't exist, and so you were running on a system. When you add asset class and when you merge someone that has another system, you're like piling up like twilight zones of systems, right? And the other thing is, I realized a lot of the tech, a lot of the systems or platforms, OMS, PMS, are all 20+ euro systems.
Yeah. Most of them came from what they originally set up and functionally set to do. So if you had an equity trading, if you were a mutual fund business, you used a certain equity trading platform, which was designed to be a long only. You bought an asset and you could trade around it, but that was all. Now you have credit overlay, you have volatility overlay, you have VAR swaps, you have indexes, you have to track to indexes. The complication around that meant that somebody then, you have my equity system, and now I need my derivative system, and now I need my index system, and now I need my reg reporting system, now I need my liquidity, et cetera, et cetera, et cetera. The data model behind all of those were typically built on old data models, whether it's SQL or databases or whatever, that was functionally set up to solve that problem. I have a listed equity in North America, therefore here are the following characteristics I have to key in to book that trade. Bring in a derivative of that, bring in another overlaid asset class on top of that, bring in a combined credit and equity portfolio, and the regulatory reporting that requires you to bring other information, whether it's liquidity, trader ID, etc., into doing that report. Suddenly you just created systems upon systems upon systems, which is, anybody that's probably listening to this podcast is very familiar with that legacy platform challenge. And it's not something that has been addressed systematically. It's been done as businesses have grown. And it's a business, right? This is the business of asset management. So typically they're focused on where their revenue growth comes from. And guess what? It's been an amazing 30-year run. I'll always say I arrived into the fixed income world thinking, hey, I've missed it all because I'm not in equities. Guess what? Rates went one way for a long time they just only recently have they started to increase. Massive bull market in fixed income for 25, 28 years, right? The same for equities. The risk premium, the volatility has been suppressed. Growth has, multiples have come in. Huge bull market, albeit, some notable exceptions along the way. It's been a massive growth area. So a lot of these folks haven't had to focus on efficiency and operations. But I think when you start decomposing what the growth is for the business as opposed to for the investment side of it, it's really important for them, and they all understand this, to do things not just from an efficiency perspective, from a cost perspective, but also from a risk perspective, from a regulatory perspective, from a client perspective, and from a markets risk perspective. So people are differentiating themselves by their ability to be more efficient and be more technically aware of the solutions in the marketplace. A lot of that's come from cloud computing. It's come from the rise of quant trading. It's come from the rise of people understanding of cleared derivatives and exchanges, and the progress we've seen in the markets have required us to be more aware of the technology solutions. And I think a great example of that is a lot of the businesses you were involved with, Kit, and the folks in market were involved with, right? Technology was a massive enabler for markets growth, from when it was launched in 2003, 2000, that time frame, to even where it is today, right? It's something that continues to evolve and is being utilized in the industry, but you still have this massive challenge around those old legacy systems, as you say, 20, 25 years old, that are not being upgraded, not being maintained, and it's only becoming more complicated. And strangely, when we're seeing this as we're starting our go-to-market into the industry, it's all the same problems that I had when I was an asset manager. And actually, when I joined Market 2015, I actually initially joined Market to talk about the strategy towards the asset management industry. It's actually where you and I met over a cup of coffee in Times Square in New York City back in probably 2015, right? Yeah. And I kind of drew this thing which said you have all this great data, you have these great systems and software solutions, but you need something in the middle. Like you need some sort of hub thing in the middle that you can join this all up on. And ultimately that's kind of that's the solution. And now with Hub, we're getting an opportunity to solve for it.
So let's jump to Hub actually, because Hub is interesting, right? Hub is typically people launch a startup, they get seed capital, and they trying to build a minimal viable product market fit. Hub is different. Hub is actually founded by a consortium of industry titans, right? You have S&P, you have State Street, you got PIMCO, you got Man Group, you got Microsoft. I'm sure there's a few others I'm missing, and it's a set of different audiences that you're now running and represent as a CEO. Talk about managing stakeholder management of running a company that's like so many parties involved.
Yeah, what I would say is that we have these amazing partners, right? That the approach that was taken with Adam Kanzler, who's the chair of Hub here, leading SPGI's global market intelligence businesses, Lance Ugla, who helped bring this together whilst he was in IHS Markit. The challenge was, let's talk to the industry and ask them what the problems are. And we did that whilst I was still sitting in my seat in IHS Markit. And you know what? We spoke to, I don't know, 20, 30 trillion dollars of assets, right? And they all said the same thing. I got this problem of, how I do my reg reporting, or my client reporting, or my risk, or, and they'd all talk about things that they were very specific. These are challenges. But then we came across, in Man Group and in PIMCO, and Manny Roman, who was is the CEO of PIMCO, who was the previous CEO of Man, and he said, we don't have a problem with, you're talking about the wrong thing. The problem here is how that data is managed within an organization. And I kind of went, that's exactly right. That's exactly the problem. It's not the point solutions, because they come. You need those point solutions to build a business and build a product business, etc. But actually, you have to get the hub. You have to get the foundational data model correct. And we couldn't have done that without that enterprise scale partnership that we have with PIMCO, Man, IHS Markit, S&P now, Microsoft, and State Street. There are shareholders. They're who came together to say, there's a better way of solving this. It has to be done in a greenfield way, separate capitalized business, off to one side, totally separate from any of there's ownership, obviously, but totally separate from any of their businesses, to build solutions that work in the first instance for them, but then sell those solutions to the marketplace. And look, we launched mid 2021. Within 2 years, we were live in production with enterprise products being used by our foundation partners, processing hundreds of thousands of trades, doing thousands of client reports every month. And now we're starting to off our foundation data model. And now we're starting having those conversations with the broader industry. Here's some of the solutions we have. Here's our capabilities. Here's our products. Here's our team. This is what we're doing. And every single one of the folks that we're speaking to right now are coming back and saying, yeah, actually, maybe we don't need that big full transformation, but we got a challenge here. We got a challenge here, which is back to what we heard 4 years ago, 5 years ago when we were launching Hub. So the partners have been amazing. Honestly, it's a really easy job when you have that type of partnership around you, because they're there to make you successful. They've been nothing but pushing us to be, run faster. I'll always say I'm pretty ambitious, and I'm pretty, I have some pretty big views on what we should be doing. But it's been amazing to work with the foundation partners who have even bigger views for what the industry should be doing, and are quite frankly leading from the front as well by supporting this. So yeah, it's been a great experience. I've learned a lot as a CEO. I would definitely say my learning curve is pretty steep. I've been a CEO before, but in the context of an asset management business. To do it in the context of building from scratch, nothing, zero, enterprise grade platform that's being used at scale by some of the world's largest asset managers in a very short period of time has been the most positive thing I've done in my entire career, and I've learned so much, and I still learn. I mean, I have so much to do. I feel like I got a million miles to go before I even begin to achieve the levels of the success of the products that are out there. And I do think as a business, we've done a huge amount. But when I look at the opportunity out there and the challenges that we're seeing in the industry, you know, there's a massive opportunity, and it just makes me very excited to be, you know, we're 2.5 years in, nearly 3, we'll be 3 years in the summer into the journey at Hub.
Yeah. Well, it's interesting that you mentioned the difference as a CEO of a hedge fund, or, you know, being a senior part of running a business inside its market, and now being your own CEO. Talk to the audience about leadership styles and how that's evolved across that journey for you.
Yeah, I was thinking about this the other day. You know, I think a lot has changed. I mean, I've been around 30 years, right? So the leadership style that you had, where you're sitting on a trading floor, very different to the leadership style when you were. I went to work for these, you know, these folks in Washington, D.C., in New York City, private equity folks who've done. I was a young guy, 26, 27. I do look back sometimes and I go, man, that's not an optimal way of interacting with folks back then. But so you adapt there. You understand then that you're, you know, I always look at it very simple. Even when I was running my proprietary positions in a bank, I had a client, I had a customer that I had to make sure it was satisfied. I had stakeholders. They were the bank, my boss, my head of trading, my head of prop. Same thing when I went in the asset management industry. I had boss, they were called my investors. They were the folks who gave us money to invest. When I went to market, it was a really easy transition for me, strangely, as a leader, because I went from understanding you have to certainly, I always view myself as I'm serving somebody else, whether it's my customer, whether it's my investors, whatever it is. And I got an opportunity to meet everybody in market, yourself included, when I began. And what overwhelmed me was the positivity that I saw there. Everybody finished up. I did 90 meetings, and everybody finished up with, let me know if there's anything I can help you with, right? And I was coming from a trading hedge fund background, and I kind of went, yeah, right, you know, sure, I'll let you know, no problem. But it started dawning on me, actually, that was exactly how everybody thought about it, because everybody was aligned to the same view of success. It didn't matter if you're running your own business, running an acquisition, running a support function. Everybody was bought into the journey that we were on. And that was down to the great leaders we had in market, Lance obviously being the CEO there. But, you know, I think what the real strength was, everybody thought like that. So I had an opportunity to be involved in that. And my leadership style changed. You know, I suddenly had a team of hundreds of folks, whereas when you're working an asset manager, I think the biggest firm I'd worked with had about 80 people. And I arrived into market with 3,500. And I thought, oh my God, this is the biggest place I've ever worked since I was in a bank. And of course, you know, over that period, IHS came in and we went to, you know, triple, quadruple the amount. But it never, that entrepreneurial drive and spirit and willingness to help and drive success never left. And so I tried my best, I don't know how successful I was, to provide that leadership to the team that I was responsible for, and that, you know, we were all together delivering for everyone else, not just our little silo. And so when I brought that into Hub, it's the same approach, right? I think obviously it was smaller. I love building businesses. I love building teams. I love working with teams. You know, having an opportunity to do that from scratch. You know, a handful of us started in Hub, and we built a team up to 80 folks today. I'm very fortunate that when I was in market, I had this amazing delivery team in India. My first time ever being in India was just, you know, joining market. That's where 70% of my folks reside today. And that the leadership that, you know, they have with their organization and helping us come together to be successful, focused on delivering great products, you know, starting with people, great technology layered on top of that, solving problems for customers with great products. That's real. You know, you don't have to be a leader. You just say, this is what we're doing and here's the challenge. How do you think we can change this? How do you think, you what do you think we should be doing around a table? Oh, I think we should do this. Great. Okay. That plus some next person. Well, yeah, I think most of that, but maybe plus this. And then somebody else going, you know what? None of that plus this. When you bring everybody along on that journey in a positive way and all working towards the same goal, that to me is the biggest change, right? So from being a very, I lived and died by my daily P&L as a prop trader, by my monthly NAV as a hedge fund, and by the return on invested capital in the private equity business, to working with a public company where it was quarterly earnings and you were part of that. This is a much bigger thing in terms of the vision and the goal. And you have to get people understanding that that's the journey we're on, but they really motivate themselves. But, that's the biggest learning I've had is you have to adapt, should I say, your learning style, your leadership style. But really, it's all about the people. And if you have great people working with great technology and great customers and partners that we've had, that's the real key to success. You need a little bit of luck and timing and everything else, but the old, as the old saying goes, the harder you work, the luckier you get. And I think I've been incredibly lucky in my career to work with amazing people, and I would say that the seat that I'm sitting in today is very much serving the team, serving our shareholders, serving our customers, but doing it in a way that you're very positive with everybody, and you can do it much nicer than maybe I used to do it 30 years ago, which is also maybe a function of age and experience.
No, that's very valuable insight. Now, an interesting question from the audience, which I think any of this talk, if AI is not brought up, like I'm not doing my job, I guess, apparently. But the question is, how do you see AI or the asset management industry leveraging AI? And how does all that work in terms of, because, and I don't mean to pre-sell her, but for you to get AI, you got to get your data estate in order, right? Like that's really the first thing.
Yeah, it's a really interesting one, right? Again, not to date myself too much, but technology has been the biggest change factor over my 30-year career, right? What's the old? I always ask anybody that asks me this question: what's the oldest piece of technology that you have in your home, right? Maybe somebody has a bedside clock or something like that, but everything's kind of 2 or 3 years old, and even iPhones were only launched in 2007, etc. Technology has been a huge driver, and there's been lots of big changes. Obviously, internet, cloud, etc. When I started Market, you couldn't even mention the word cloud to a tier 1 financial institution. I mean, one of my first meetings with one of my colleagues, we went in, big tier 1 financial institution, and the sales guy turned around to me and said, "Don't mention the word cloud in this meeting." It's the CTO of the firm. They do it all in-house install. 18, 24, 36 months later, all they were talking about was cloud. That's a massive shift. AI, very similar feel to it. Don't mention AI, don't want to talk about it, or everybody's doing it. And we're embedding large, and it's fantastic having Microsoft as an investor, right? Because we get early access to their sandboxes and their testing environments and the secure environments. But as you rightly say, for AI to function properly, you have to have a governed, an expandable data set that works, right? If you don't have a centralized, well-governed data that you're ingesting and running, putting any large language model on top of that, putting any AI that you want to talk about on top of that is very challenging, right? Gives you the wrong answers. It starts, we've seen it outside. It gives corrupted data, corrupted outputs in terms of different, manifestations. But bringing it back to the investment management perspective, I think there's a huge opportunity there. I'll give you a great example where we're doing client reporting for one of our foundation partners. We're producing 18,000 client reports every month. Very basic, holdings, transaction summary, everything else. We put we put a co-pilot model on top of that, and the client associates can now query, what does Kit hold, or what was his transactions last month, or what was his return last month? they're querying off a central governed database, it's instant. And rather than, I have to go and download all the transactions and I have to go and look back in the historic and I have to bring in all the information, it's all at their fingertips. So what I always think about it is the same way I thought about any change in technology. Massive opportunity to enable people to do more, because it's not the end. I mean, maybe some folks can have a different perspective on what AI means for humanity. To me, it's just the next phase in what we can do better, right? And this is something that we're all involved with, because we all use these devices. Most of the planet is using these devices, and it's gathering data, but it's all disparate. Some folks write stuff down in journals. Some people used to track stuff. You know what? It's now all freely available, whether you're wearing a fitness tracker or you're carrying a device in your pocket with gyro measurement. Bringing it all together to get insights is what's critical, and enabling you to do other things, whatever your goals are personally or professionally or from an industry perspective. Allowing you to do that quicker, faster, more efficiently is ultimately then allows you to do other stuff. Grow, make a bigger organization, have acquisitions that you can scale your business with, understand where your customer needs are, better than you're servicing those customer needs. All of these positive enablers come from technology evolution. And I look at AI as being a big component of enabling that. So I'm always very positive about what it means for the industry that I'm specifically looking at, which is the investment management and financial technology industry. I mean, obviously it has other implications for other components of the world economy. But to me, I see it as just something that enables the next level of evolution in our industry to better serve ultimately the customers and shareholders. So it's something we spend a great deal of time on. If I spend 15 to 20% of my day on shareholders, 15 to 20% of my day on customers, tech is a big component of that, and a big component of that is AI. And people and product are also other things that you ultimately has to do as a CEO. To me, technology is an absolutely integral part of that discussion, and AI is at the very forefront of that.
I think you raise a good point. That is, look, whether it was cloud or AI, etc., it's really about back to basics, right? It's getting data intelligence in the right place first before you can think about augmented or artificial intelligence. Yeah. And I think a lot of people, they get so wowed by the next sexy thing that they don't realize that getting your foundational basis right, which is getting your data intelligence in the right place, it's what will enable you to adopt new technology to accelerate. And that's the piece I think what's interesting with her, because you're solving the data intelligence aspect, right, for the asset manager.
Look, I think absolutely. Unless you can ingest data, govern data, and present data in a very structured way, and the good news is you can do that. Technology exists there to do that. Streaming, real time, not batch process. It's all, and that's what we've architected. That's what we built. That's what we have live. Unless you can do that, all the other downstream components of it, whether it's insights, whether it's putting it into AI models, training it in language modeling, that becomes incredibly difficult if you're starting from poor output or fragmented output or output that isn't linked to directly what I'll call the shortest digital distance from its origin, right? So typically we've seen, and this comes back to our earlier part of the conversations, multiple legacy systems, whether it's OMS, PMS, etc., generating information. So the example I'll always give is, we all agree a trade, counterparty, and we all agree a trade, and then we all go away and spend 2 days doing stuff and reconciling, and then we all come back 3 days later and go, yeah, we agreed that, right? If you're capturing that moment, this is obviously straight through processing happens, but even with everything that we're seeing in the advancement there, it doesn't explain away why there's tens of thousands of folks still doing this daily stuff. If you can't get the data right when it's generated, when that spark between two counterparties come together, if you can capture it at that point, actually then you can use it at multiple points downstream. But you have to be able to put it into a fully flexible streaming real-time environment that's governed, that's secure, and that enables folks to join data together to get the insights that they need, whilst maintaining that flow and that stream of data. There's no point in grabbing it out and working it over here on a spreadsheet or on a data model or a data lake. You have to have it all coming through a platform that has that capability of streaming data, governing data, and making sure that it's delivering it to the right endpoints for our customers.
No, that's amazing. Paul, thank you for being on today. That was so insightful, an amazing journey. I'm actually pretty excited what Hub's building. Now, usually how we end the conversation is really the question to you is, how can the audience help you, and what are the type of people you want to connect with from that perspective?
Yeah, look, I think we've been really heads down building our product for the last couple of years, and we're now starting to, and we've been very actively over the last quarter or so, speaking to that next group of customers. And so for me, it's about just saying, hey, here, I'd love you to come and have a conversation about some of the challenges you're seeing in managing basic data challenges, whether it's, we see it all the time, I've got a custodian file with an OMS file with a risk file, and I need to combine it all, and how do I do that? I do it myself, or do it, and bring those use cases, bring those problems, bring those challenges that you're seeing, and we'd love to sit down with you and show you some of the capability that we have. So I think that's the first thing. What I'll always say is, we're always interested in speaking with great people who are using data, and whether that's from a existing solution perspective that need this component of governance and solution, or they're looking to be part of something that's really interesting and growing and fast. To me, that's really critical, is having great people having the same viewpoint of what the challenges are and being part of that solution. So yeah, customers, folks that see the idea and any of the other solutions that are in the marketplace that want to work in partnership with a big industry changing platform. I think I have the same viewpoint that I've always had, which I'll always be open, transparent, explain to anybody, give anybody a demo of what we're doing, how we're thinking about it, how we're solving it, and love to engage with any of. I'm sure you have lots of folks who are in the space who are interested, and love to engage with them. Show them what we're doing, show off a little bit, because we built some great things, and there's a lot more to come.
Great, thank you, Paul. Really appreciate having you on today.
Great to be here, Kiet, and hopefully we'll see you very soon.
Yeah, definitely. To the audience, thank you for your continued support. Thank you for continuing to tune in and keep asking me to keep doing this. There were always points where I said, okay, I should stop doing this. And everyone's like, no, keep doing it, because we're finding great value. So thank you for your continued support. Have a good one. Thanks, everybody.